Good morning, crypto warriors, and welcome back to the Gentlemen of Crypto, episode 595. Today is Tuesday, August 25th. Of course, tomorrow we'll actually be posting this interview, so by the time you see this, it will be August 26th. And I'm King, here to bridge the gap between the community and crypto every day, Monday through Friday. And today we have a very special guest here today. We have Jacques Voorhees with us from Icecap. He's going to be telling us all about the non-fungible tokens that they're offering from the diamond sector and the diamond industry, bridging that over here with the blockchain and cryptocurrency industry. So let's give them a loud round of applause and welcome Jacques Voorhees. Thanks for joining us.
Thank you so much. Pleasure to be here.
All right, Jacques, as we already talked about, first question of the day, I have to ask you. And for those who don't know, his son is Eric Voorhees. We talked about him on the show before with his Jack's Wallet and some of the other good things he have going on. So the first question, Jacques, is how did you personally get into crypto? And I guess what made you, tell the story. How did you get into crypto? And then how did you say, hey, I want to do something with diamonds now on the blockchain? How does all this work? How does all this happen?
Yeah, so it's kind of I'll answer that in a reverse order. I've been in the diamond industry all my life. I've been a disruptor in that industry. And when I say I've been in the industry, that's a little misleading. It's more that my customers have all been in the industry. I'm known as kind of the father of online trading. I brought computer technology, online technology to the diamond industry with a company called Polygon that I started in, hold on to your seat, I started in 1975. Now just think about that. There was no web. Most people did not have personal computers. The idea that I could come in there and move the diamond industry onto computer networks was totally ridiculous, especially because I knew nothing about diamonds, nothing about computers, nothing about business, had no money. I was probably the least likely guy to do it, which is why it took me so long. The reason I got into it was because back in the late 70s, there was a bit of a craze in diamond investment, and this is going to be relevant to our crypto story here in a minute. It was during Carter administration. It was high inflation, low interest rates. Everyone was jumping out of cash and jumping into hard assets like gold, silver. Of course, if there had been crypto there, they would have been jumping into crypto. But another thing they were jumping into was diamonds. Diamonds had a pretty good, and still do, pretty good track record of in multi-decadal time spans. They constantly hold their value, they go up, and so forth. So a lot of people were buying diamonds for investment, and that gave rise to a diamond investment boom of companies catering to that demand. And most of these companies, I can say so now, I think this is not controversial, were borderline scams. They were serving up diamonds at high price markups, and they were hiding behind the fact that diamonds had always gone up in price, would never go down because of the De Beers cartel. That's kind of nonsense, but that's what they were saying. And so I was a family friend got into that and was working for one of these companies and wanted me to join him. At this point, I didn't know anything about this subject. I went to New York and took the Gemological Institute's 1-week course in diamond grading. And guess what? The guy I happened to sit next to was the son of the Diamond Dealers Club, the president of the Diamond Dealers Club in New York. And when he heard I was getting into diamond investing, he said, I think you better hear what my dad has to say about this subject. So he introduced me to that guy. Pretty scary, because I'd grown up in Iowa. I didn't look anything like the typical Jewish diamond trader. And I was going into, I remember when I got onto the elevator, they were all the Hasidic Jewish people. And they looked at me, this young kid from Iowa. They said, son, this elevator only goes to the 12th floor. Are you sure that this is the right elevator? Because that's how insular that industry was. Not a lot of diversity on 47th Street. So anyway, I met this guy.
A few uncut gems. I know where you're at. I saw the movie.
Yeah. Actually, I haven't seen that movie yet, but I have to. And it was even more so back then. So anyway, William Goldberg said, you shouldn't take that job offer because diamonds are not a good investment. And I said, why not? And he said, because you can buy them, but you can't sell them. It's easy to walk into a store, buy a diamond, walk out, and now if you're an investor, you need to sell that diamond. Where are you going to sell it? There just aren't any good options. You're going to sell it to a pawn shop or some retail jeweler, and you're going to lose over 50% of the value.
That was going to be my question for you, too, so I'm glad you answered, because this has already happened to me. It's when you have the diamonds, where do you do with them once you're ready to sell them?
Exactly. And yeah, it's true. The diamonds are a hard asset. Diamonds go up in value. But there's such a huge spread between the buy and the sell, or the bid and the ask, we might say in investment circles, that diamonds would have to go up hugely to overcome that immediate drop. So that was my conversation with this guy, and I was driving back home, my whole career destroyed by this one conversation. And I thought, well, he said there's such a high bid-ask spread because there's no two-way central marketplace for diamond investors. And I thought, if that's the case, why don't we start a two-way marketplace for diamond investors? And that's where the idea for Polygon came from. And I was thinking, if there's all these people buying diamonds for investment, let's set up a structure that will work for them. Well, again, I had everything going against me, but 7 years later, we actually opened for business right at the point where the entire diamond investment market crashed. So our timing was just impeccable, right? And every one of those companies that have been set up to cater to investors went out of business, except for my company, Polygon. And what we did was we simply retooled the network that we built for the jewelry industry to make it useful for jewelers, even if the investment market was gone. And also, we were finding out that diamonds are so difficult to trade for investment that it probably wouldn't be a good system anyway. So we kind of came to that realization right at the time the diamond investment market crashed. We retooled for jewelry and ultimately became very successful. We pretty much revolutionized the diamond industry. Today, most solitaire diamonds, which the center stone that would go into a ring, like a bridal engagement ring, most of those diamonds are now sold on computer networks at some point in the supply chain, either to the consumer through sites like Blue Nile, or to business-to-business transactions through networks like Polygon.
So it's already happening. The digital thing is already happening, you're saying?
Oh, yeah. This is what I spent my career doing. But it's important to understand that my original goal was to address the diamond investment market. And most people in the diamond industry don't know that that's what I spent 7 years trying to do. They just know me as the guy that started Polygon, and they don't know that backstory. But the backstory is really important here. So I'm now going to jump ahead. I sold my company Polygon to a public company back about 10 years ago. I've been kind of a consultant to the industry ever since in the field of online marketing and so forth. And about 10 years ago, roughly about the time I was selling my company, my son Eric was living in New Hampshire, part of the Free State Project. He's always been a libertarian. And I was visiting him, and he said, "Hey, Dad, let's go to dinner. There's something I want to talk to you about." So we did, and over dinner, he starts telling me about this thing called Bitcoin, which I'd never heard of. This was 2011.
I was going to, okay, so 2011, you hear Bitcoin from your son.
And he's just, I've never seen my son more excited about anything. And he said, "I think this is what I'm going to dedicate my life to." He said, I'm just totally into it. And I mean, I'm a talker, but I didn't say more than a few words because it was all him talking that evening. Okay, so jump ahead now to about 9 months ago. And Eric had become quite successful in the world of Bitcoin, crypto, blockchain.
He's doing okay. I've heard the guy's name before.
He's doing okay. And, as parents, we're just proud as hell of what he's done and his enthusiasm. And, he's never lost that passion for crypto from that night in 2011.
Real quick, Jackie, just let you know I'm hearing some little bit of interference, too, just to give you a heads up with the mic.
Okay. How's the sound now?
It's good.
Okay.
I think it just might have been scratching and something.
I think I was scratching it. Okay. So about 9 months ago, I was staying at his house, and we were up early over coffee. And he said, "Dad, have you ever heard of the ERC 721 standard, the non-fungible token standard?" And I said, "No, and I have no idea what you're talking about." So he started telling me about it. The idea that up till now, all tokens had been fungible tokens, like every Bitcoin is like every other Bitcoin, and so forth. And all those ICOs, the tokens are the same. So he was explaining that something had come along called non-fungible tokens, and that it allowed a token to be connected to a real or digital world asset of some kind. And it could be paired up with that. And I said, I was trying to drink coffee really fast here so I could, get up to speed. And I said, "Great, why are you telling me this?" And he said, "Because you could take a non-fungible token and apply it to a diamond." Well, suddenly I got interested because that's my industry. And I said, "Well, what would be the value of that?" And he said, "Because what you could do with that diamond, you could store that diamond in a vault, and the token representing that diamond could then be traded on any of the trading platforms that accept non-fungible tokens." And he said, "There's already a couple, and there will soon be more." And I said, "Well, wouldn't that be just like a warehouse receipt?" And he said, "Yeah, it would be a warehouse receipt. It'd be a warehouse receipt in the form of a non-fungible token. And if you did that, you would open up the diamond industry to investors. Okay. I said, Eric, are you aware that when I started Polygon, the original goal of Polygon was to be a marketplace for diamond investors? And he said, no, I had no idea. I said, Eric, I know more about this subject than anyone on the planet. I know all the reasons why this won't work. I spent 7 years knocking my head against the wall trying to make this work, and it won't work. So that started a process of about 30 minutes of me telling him, it won't work for this reason, for this reason, for this reason. Every answer, every question I had, he shot down. And by the end of it, I realized, damn, he's right.
Well, real quick, what was the glaring thing? Like, if there were one glaring thing you can mention or a couple, what was one of the things you're like, this is the reason why you telling me this, just for right now, it won't work? What was like that glaring thing you thought of?
Yeah, good question. I was afraid you'd ask that because now I'm sort of not remembering what the answers were. But the main issue, well, here's one of them. I said, okay, why would you want to buy diamonds for investment? Why would you not just want to have, like, I understand wanting to have hard assets. I totally get that. But what can a diamond do that gold and silver can't do better if you're an investor in hard assets? And he said diversification. And of course, Eric is an investor in hard assets, not surprisingly. So I was, I had a real live one sitting in front of me. And I said, so diversification, okay, why would you need to diversify? He said, because you don't want all your eggs in the gold and silver basket. There's a finite number of hard assets out there that are tradable, and you want gold, you want silver, maybe you want some Krugerrands and some various things. Maybe you want some real estate, but the more you can diversify your portfolio, the more hedged you are against fluctuations. He said gold and silver fluctuate pretty dramatically, probably far more than diamonds do. Well, that's true. Diamonds do consistently go up. They do have ups and downs, but not nearly as volatile as gold, for example. So that was just one of the questions I was asking him, and he did a pretty good job of answering it.
Peter, I can't think of his last name right now. You know what I'm talking about. Goldbug would not like you right now.
Peter Schiff.
He would not like you at all, what you're saying.
Yeah. There was a great televised debate once between Peter Schiff and Eric, and everyone said Eric won the debate. So
I saw that. Yeah, I saw some of that one. Yeah,
it was great. Anyway, so I went through this with him and asked him all the questions, and I said, okay, I'm convinced this could be done, and I said, I'm probably the best guy on the planet to do it, because A, I'm the most skeptical. I know all the reasons why it can't be done, and I also understand why non-fungible tokens could solve the problem. And just to make that clear, the reason NFTs solve the problem is because they enable you to have an instant marketplace where investors can buy and sell, buy and sell, buy and sell at the same level. They're not having to buy at retail and sell at sub-wholesale, which is what you'd have to do otherwise. And that's what gave you those 50-60% spreads.
So that price point is a little bit closer, tight-knit than, like you said, that spread would be.
Exactly.
Okay.
The bid-ask spread should be like right around 1% if you're doing this. Because take a trading platform like OpenSea, which is where our tokens are currently, the only place they're being traded right now is the OpenSea.io marketplace. And they take 1% transaction fee. So if you and I were to trade a token representing ownership of a diamond, then the in-out cost is 1%. I mean, assuming the willing buyer can find the willing seller on the crypto markets. So you go from a bid-ask spread of 50 or 60% to a bid-ask spread of theoretically 1%. And you're mainly giving people the ability to buy and sell on that same level rather than buy at retail, sell at wholesale.
And while you're actually talking too, for the listeners out there, or the viewers at least, I actually pulled up the OpenSea.io trading platform. You can see all you had to do in the search box, you just type Icecap in, and literally Icecap diamonds come up, all the different diamonds. You have the looks like the serial numbers on them as well, the different types. So I'm sure you'll get more into this, but I just want to let the viewers know I pulled that up for them as well.
Yeah, that's it. It's really easy. You go to icecap.io, OpenSea.io, type in Icecap, and you'll go right to our page. There's about 35 tokens that are up there listed. Each one is represented by a GIA certificate number. The color, clarity, carat weight, and so forth are shown, along with the price, and so forth. You can click on one of those and get more information and link all the way down to the GIA certificate. Now, one thing that's kind of interesting here is the question of what diamonds we chose to make available for this purpose. And by the way, one thing I forgot to mention, the reason non-fungible tokens are a perfect fit for diamonds is because diamond ounce of gold is the same as every other ounce of gold.
Wait, you broke up right there. You said the reason why NFTs are one more time?
Yeah, the reason NFTs are a perfect fit for the diamond industry is because diamonds are themselves non-fungible. Every diamond is different from every other diamond. Unlike gold, where every ounce of gold is the same as every other ounce of gold, or every share of IBM is the same as every other share of IBM. So if you're going to be trading something, you need to have a token that's not like Bitcoin, that's every Bitcoin is like every other Bitcoin. You have to have a token that's itself unique and individual and can be connected to a specific thing, which is a diamond. That's why this whole thing works. Without NFTs, this whole plan wouldn't have worked. So we now have these 35 tokens up there on OpenSea, and they are able to be traded just like CryptoKitties or any of the other digital assets that are out there. We happen to think that using non-fungible tokens for opening up the diamond industry to investors is a better use case than CryptoKitties, but that's just me. I don't even know what CryptoKitties are.
So, all right, here's my thing, and I'm with you on everything you said about diamonds or any other, some other different hard assets or assets that are different. Each one is different. Like you said, one Bitcoin is the same as another Bitcoin versus a diamond being different. But my question, and some of the biggest arguments I've seen in space, and some of the arguments I've had, or whatever, some of the curiosities I had, is the initial when it's being tokenized. How can we be sure that's 100% accurate? Because that is where where I've seen that's where the error can come from, the onboarding of a hard asset before you put it away in the safe, saying that this is a real token and is there. Because we saw Canada and their fake gold, so we don't want none of that floating around.
Right. Okay, a lot of good stuff there for me to answer. I'm going to get a little into the weeds here, if you don't mind,
with respect
to diamond grading. A lot of people have heard of the 4 C's that the GIA, Gemological Institute of America, created as a standard for grading about 40, 50 years ago.
Color, carats, I know too.
Yeah, color and carat. And the other one is clarity. Mm-hmm. And the fourth one is cut quality, the quality of the cutting. And that quality of the cutting is one of the most important. People often don't think about that. So the idea is, if you know the 4 C's of the diamond, you know how much value you know what that diamond is, you know what its value is, right? No, you don't. And this is one of the big untold secrets of the diamond industry. The 4 C's only determine about 60% of the value of the diamond. Almost no one knows that. Wow. They think if you know the 4 C's, you know what you're dealing with. No, right. You don't. Okay? And this is why you can go to popular e-tail websites like Blue Nile or James Allen or any of those and type in something like into the search parameters, like let's say a G color, VS1 clarity, 1.0 carat weight, and triple excellent cut quality. Okay? And you'll get prices, you'll get hundreds of diamonds, and the prices will be all over the map. They'll range. In fact, I did this search recently. You'll get prices ranging from $5,000 to over $8,000.
Wow.
Now, how's that possible? It's supposed to be the same thing, right? It's not. It's because of all those other factors. And the other factors are things like graining or fluorescence or uneven girdles or even bad grading. Not every GIA cert is correct, okay? So you've got all kinds of things that control what those different prices are. All right, so when we decided how are we going to address this for the diamonds that go into the vault, so to speak? Well, the first thing we did was we came up with program standards that first they're reasonably tight standards on those 4 C's, like nothing under half a carat, nothing under VS2, nothing under triple excellent. The cut has to be the very top. No reservations on that. And nothing under I color. Okay, but then within that, our program standards only allow stones that are not what are called in the industry problem stones. And you go to a big e-tail site, probably 85% of the stones that you're seeing there would not pass our qualifications. There'd be something wrong with them. And this is why it's so important for an investor, because if you're going to buy that diamond, you need to be able to sell it just as easily. And if you have a problem stone, you're going to have a harder time selling it. No one from the trade will buy that stone. They'll have to see it first, and they'll offer something far less. So we decided to just say no to all those problem stones. and we're one of the very few companies that only sell those kinds of problem-free stones. So that other 30% or 40% of what determines value, we screen all that stuff out so that it's only the best. That's what we mean by investment quality.
So already coming to your platforms, you're already saying that, hey, we're not even messing around with the maybe or what ifs. We're only going for top.
Exactly.
Okay.
And then the way we guarantee that, we start with only stones that have GIA certificates. And then we send those stones, those certificates and the stones, to another lab in New York called GCal. And GCal specializes in grading the grading certificates. In other words, they're like a second opinion that look at it, and they are extremely tight. When we first started doing this, half the stones we sent to them were getting rejected, even though our supplier knew what was necessary to be accepted. That's how tight they are. And so not only do they have something called a diamond audit. Not only do they have the diamond audit that determines that the grading is accurate, not only do they screen out all the problem stones, but then they guarantee the grading. And no other grading lab in the world does this, certainly not the GIA. The GIA even says that their grading is merely a subjective opinion. But at GCal, it's not. It's actually guaranteed, and they back up their guarantee with an insurance policy. So if you ever found out that diamond is not what they said it is, they will pay out the difference in value. Again, no other lab in the world does that.
Now that right there is some security for NFT.
Exactly. So then, where do we store the diamonds? We store them at GCal, at a vault in GCal. And this is one of the services they offer. It's a vault that has its own insurance policy associated with it, et cetera, et cetera.
And where's this vault you say located again?
Yeah, it's somewhere in New York.
All right.
Anyway, now, and here's the real question. Now, let's say you're an investor. Let's say you buy one of these tokens. How do you really know that diamond is sitting there? Okay, we have our website that tells you all about GCal and all about all this double verification and all about these insurance policies. But how do you really trust us? Well, I have two answers for that. One answer is we brought together some of the most well-known and respected people to be part of this company. For example, our chairman of the board is the former president, CEO of the Gemological Institute of America, 20-year president of GIA.
Oh, wow. I'm looking at him now. Bill. Yeah, I'm seeing it on the website.
Bill Bcash. Yeah, another guy, Jeff Fisher, is the chairman emeritus of the Jewelers Vigilance Committee. That's the national organization that polices ethics in this industry. So if you're a jeweler out there in Peoria ripping people off, the JVC goes after you to protect the industry. He's the chairman emeritus of that organization. And we have me. I'm not as famous as those two guys are, but I'm well known in the industry as the founder of Polygon, the guy that brought online trading to the diamond industry. So I'm fairly well known as well.
Well, just hearing you talk about diamonds, I think you've already proven yourself, so we're good to go.
Very good, thank you.
So I'm glad you brought that up. Actually, that's where I want to shift into. So, people kind of heard about your background. I think it's pretty cool, too, that your son, Eric Voorhees, of course, known as one of the first people in crypto and Bitcoin, had that conversation with you. And then, it's one of those things everybody says, well, it takes 7 times to hear about Bitcoin and crypto for you like, all right, let's do it. And then for it to go into, this conversation at a dinner table. And then, hey, you say within 9 months or 9 months ago, you actually got started to it. And now you have it. So I have the Icecap website brought up. Again, I see some of the people in it that looks amazing. So it sounded like you were going in this direction already. Yeah, for the investor, for the end user, for the people who are just in the space and say, why would I want to buy this token? Or, where can I go to buy these tokens? Just talk about the actual project itself. How many tokens are there? How does this work?
Yeah.
Give us some information.
Yeah, and one thing I'm going to just squeeze in here before I get to some of those specifics. The other reason that you can trust that those diamonds are there is because one of the things that we encourage people to do if they invest in diamonds is to don't just leave the stupid diamond in the vault. Redeem the token and take the diamond, okay?
There we go. Now I really trust the project. When you got a project founder telling you to not only get the token, but to get the end product. That's what we always talk about here. People want to buy futures and all this, like, just get some Bitcoin. So for you to say not only get the token, but to actually go hunt down your diamond and get it, I like that.
Yeah, so you're buying a diamond that has been tokenized,
right?
And the token can be traded freely. And if you redeem the token, We send you the diamond, you send us the token, we burn the token. And why would you do that? Because now you can enjoy the diamond. You put it on your girlfriend's finger, or you put it in your own safe, in your own bedroom, and you get it out at midnight and fondle it at candlelight, or whatever you want to do with your diamond. So you don't have to trust that we are holding your diamond for you. You can hold your diamond for you, or put it in your own safe deposit box.
Can it be re-tokenized from you? Is that what
yes,
we... Okay.
Thank you.
Yeah.
Thank you. So for $25, you can re-tokenize the diamond. The process just reverses. You send it back to GCal. You pay us $25. We mint a new token. The diamond now stays in the vault where it was before. The token goes up on OpenSea, and you put a price on it, and now you can sell your diamond via a token marketplace. And the final reason that you might want to buy a diamond for investment and take delivery of it is I always tell people diamonds have two advantages over gold. I'm not talking about the volatility, but the two specific advantages that only diamonds have. One is you can enjoy them. Like I said, in the meantime, you can enjoy them. You can put them on a piece of jewelry or do whatever you want to with them in terms of actually enjoying them as a product. Secondly, they are the best store of wealth if you care about portability. So let's say it's zombie apocalypse time, right? And we're getting closer to that every month, right?
Right, we are.
Or forget zombie apocalypse. Let's say it's worse. Let's say it's 2020.
Yeah, basically, yeah. Let's say 2020 is that. Say it's November 2020 is election year, right?
Yeah, there we go. Yeah, what's the world going to look like on November 3rd? I can't predict. It's going to be a mess. So in the meantime, if you have possession of your diamond and you need to flee, with your bug out bag and your guns, your ammo, your special decoder ring, and your survival knife, you can bring $1 million of diamonds with you. In a shirt pocket. Diamonds are extremely portable, extremely small. This is kind of gross, but people smuggle them by literally swallowing them, and a couple days later, out they come.
Yeah,
you can get across
especially
the
in other countries where you talk about people are crossing borders for real, and they're trying to bring wealth with them. And I know, of course, we all want to say Bitcoin, 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 but everyone, for whatever reason, they're either not up on it, they don't have the technology, whatever. So when you're looking at old school methods of transferring or getting wealth out of a country, which we see happening every year, I get you. Diamonds are a way better solution than gold.
Exactly. Yeah. Good luck trying to carry $1 million of gold through the border. So anyway, that's sort of the two reasons, or I guess if you count not as volatile, the three reasons why diamonds can be better investment than gold. And we wouldn't recommend that anyone not invest in gold or not invest in crypto. We just think that people at some point, if they have a portfolio of hard assets, it makes sense to have a percentage of that. It can be a small percentage, but a percentage of that in diamonds, just for diversification, for the ability to enjoy the diamond in the meantime, for the added surplus of having very, very portable wealth if things started to get real. So that's,
Yeah, so as an investor, what are give me an example. If I'm looking to invest in diamonds, or, a portion of my, especially when you talk about crypto, a portion of my crypto portfolio going to some diamond NFTs from Icecap, right? What should I expect as an investor? Like, hey, this is a 3 to 5 year thing sometimes, or margins. I don't understand. I don't know. So what would I expect?
Well, that would involve me predicting the future, which I can't do. We can.
I trust you even more now, man. If you would have gave me that answer, I'll tell you how much you can make in 2 days.
I guarantee 20% per year.
Yeah, there we go.
Absolutely, it's guaranteed. Yeah,
there we go.
No way. Yeah, none of us can predict the future. Prices go up, prices go down. It's all about diversifying. It's all about increasing the chances that whatever happens, you have something that's not going to be damaged by whatever just happened in the marketplace. That's what diversification is all about. You can look if you bought diamonds at the depth of the 2008 recession, you certainly would have made a profit. If you're able to buy and sell at the same level, again, that's the same problem. Icecap didn't exist back in 2008.
I think we might see that now again. Hopefully, next 4 to 6 months, we may see something like that again.
Yeah, diamonds are down. They hit their just like everything. I mean, 2020, right?
Right.
They hit a low point in April, and they've been coming back since April, but they're still low. And so this is an historically good time to be buying diamonds.
There it is, people. Now is your time to look at Icecap. Here's a chance.
There you are. Take and look at what Ethereum and Bitcoin have been doing lately. So if you're an Ethereum or Bitcoin investor, you might just enjoy taking some of that profit and moving it into something that is a little bit different. A diamond. The diamonds that we have up there they range in price from about, I believe it's around $3,500 to we have one up there that's a $700,000 diamond.
Woo!
Just for fun.
On the marketplace, there's a $700,000 one.
Yep, it's over 10 carats.
Oh, I'm gonna have to check this one. Let me go back and check this one out. There we go.
Yeah, I'll save it for you if you want me to reserve it.
Maybe one day.
Maybe one day. We'll see what Bitcoin.
Right. I was saying we'll see what Bitcoin does next few years, right?
Exactly. So it's pretty simple. Right now, we only take payment in USDC, which is US dollar coin. It's a token. It's a coin on the Ethereum blockchain. But we are going to, within 30 days, be able to take Bitcoin and Ethereum directly. So that's coming. But it's pretty simple. We last week we had an investor that wanted to buy diamonds for investment, liked the idea of the token marketplace, but he didn't know anything about crypto. So we had to go through the process of onboarding him in terms of crypto. We had to get a wallet, had to buy tokens, had to get fuel for the Ethereum blockchain to be able to move the USDC. We had to talk him through the whole thing, and he had the patience of Job, thank goodness. He was able to put up with it and ended up with 4 nice diamonds.
Nice.
And he's probably going to redeem 2 of them and let 2 of them stay there in New York. So
that's my example. And I'm glad you said that was my segue into the next question. How that's been the biggest thing for everyone in this entire crypto blockchain industry is the education piece. Whether you're a lawyer, an attorney, starting to do blockchain work, whatever, it's educating your clients on why this is the better way moving forward, especially people who are resistant to technological changes. So, and I would kind of assume that the diamond industry would have a good amount of those people. I'm just assuming. So I guess how has that been for you, educating customers, educating clients, educating older, people who have been in the diamond industry, trying to show them that, hey, we all need to get on board and do it this way. How has that been?
Yeah, well, and good questions. I understand. We just opened for business last month, so we're brand new at this. And we know that we have a very serious educational curve ahead of us here. And in our case, it's kind of a double education curve. We have to educate people about diamonds, and we have to educate people about crypto. Now, it's one of the reasons that we're sort of targeting in our first 12 months people that already know about crypto. We think that's like a good market for us, people that already know that industry. So we don't have to tell them what an Ethereum is and what blockchain is and so forth. All we have to do is tell them about diamonds and why it might make sense to have some percentage of your hard assets in
and
diamonds.
It does make sense. Everything you explained actually does make sense. So
thank you. That's good. That's good to hear. So we're going to be investing in a lot of videos, professionally done videos, to sort of help us with this communication challenge. We don't have them up there yet, but that's in our short-term goal list. We are trying to get the word out of what we're doing, by talking to people like you and in other ways. We think it's just a great time. The timing is great. It's a super great time to be buying diamonds, and it's a super good time to be going to people in the crypto industry because crypto's doing very well right now, and I don't see anything on the horizon that's going to make crypto not do well. I know Eric has very high expectations for what's going to happen in the next 12 months.
Hey, same. We would not be doing this show every day. We didn't think this thing was going to take off one day.
Yeah, absolutely.
So actually, I have the I have the website again still brought up. I actually brought back up the OpenSea. I see the diamond is actually listed for $771,000 or $771,120. And for everyone listening or watching, you can actually earn $3,855.60 by referring this asset to someone. So that's right. You can get you $4,000 if you know someone who's about to get married and ready to pop the big one with the big one. All right. So you can see here it says buy now, make offer. So again, as Jackie said, it's pretty it's simple. It's easy to go in and buy it. As you said, they can't do it with Bitcoin and Ethereum yet, but as you said, that's on the horizon. That'll be coming next.
Yes, that'll be out. We'll have that in September. That's real soon.
September. Oh, so that's coming here in a few weeks. Perfect.
Yeah.
But yeah, just looking at it, and of course I played around with it before I had you on live. It is a pretty simple process. And then for those who are watching, you all know what NFTs are. So it is a simple process. If you're interested in it, again, the biggest thing, I like the diversification of it. Also, what I do like about these tokens, I had to look more into the diamond industry, but yeah, if it is maintaining its price point, of course, April happened in 2020 happened.
Yeah.
But as far as store value, and I'm bringing up store value for Bitcoin traders out there, when we see the Bitcoin market sometimes just take these sudden dips, or we see the crypto market as a whole take dips, and everyone's looking to see where they can put their money to without transferring it back to fiat sometimes, right? I've seen a lot of people do the BNB thing. We talked about that. People were buying different coins trying to hold their store value. So this could be one of those options, people, where you see that, whatever reason crypto might be dropping or wherever, you say, hey, I can transfer some of this over to NFTs for now, and then I can actually sell these right back and get my money back into the crypto. So that's something to think about as well.
And let me mention one other thing. There are some regulatory challenges with what we're doing.
I'm glad you brought it up. That was next.
Yeah. We've retained a top law firm to help us navigate. A law firm that not only is well known nationally, but they're very strong in crypto and blockchain and emerging technologies like that. So they studied what we're doing. And long story short, it doesn't appear that any of the regulatory bodies right now would have any regulation that would be a problem for us. I'm talking SEC or CFTC or the fin people. The one issue is sales tax. So
yeah, I can see that. I can see it.
Here's how it's organized. When someone first buys a token, there is no sales tax. But if you redeem the token, and by the way, the second person that buys the token, or the third person, all those trading of tokens, there's no sales tax. But when someone finally comes along who owns that token and redeems it, that is when sales tax may be applicable. And it varies depending on the circumstance.
It's like the capital tax. It's the same thing when you sell it, then they're going to tax it.
Yeah, it's because at that point it's considered a sale. So here's how the lawyers set up the structure of this thing. When you buy the token that connects to a particular diamond, you don't actually have title technically to the diamond at that point. What you have is something analogous to a gift card, like a Starbucks gift card. But unlike a Starbucks gift card, this gift card only connects to one diamond that's sitting in a vault, and no one else has access to that diamond. So when you're ready to redeem, you take your gift card, add $50 to it, and you now have title to the diamond, and the diamond has now been purchased by you. And that's why sales tax has to kick in. And we set it up with that extra $50 just to be fully compliant with tax issues. Up until then, all you've done is a gift card, and the gift card doesn't have taxes on it. But when you redeem it, when you buy the Starbucks coffee, you do pay sales tax. And so that's how it works. So as long as you don't redeem the card, the diamond happily sits in the vault, and you can trade the token back and forth. But the moment someone wants the diamond itself, which we encourage, by the way, then there may or may not be sales tax depending on your circumstance.
So in general, when it comes, because again, you're an innovator in this space, you're starting something brand new. So regardless of whether it's your company or just what you've seen on the landscape, because I'm sure you've done your research, what are your thoughts on the regulations right now? I mean, and again, it may not be as tough for you, but some companies are having I'm sure your son, for example, had a very tough time to get off the ground. So what are your thoughts on regulations? I don't know. What is he seeing? What are you seeing? Is this thing going to get better, or are they going to continue to hammer the nail until we pay them what we owe, I guess?
Well, of course, we always pay what we owe, right?
And of course, be safe. Yeah, you got a new company. I'm not trying to put you in the hot seat. So they're going to be like, oh, is that how you feel, Jack Keys? All right. We'll give you the call Monday.
Yeah, exactly. The regulatory landscape is a minefield for everybody in the crypto space, as you know, and it certainly is for us. I mean, you want to talk problematic. You take diamonds, they have their own issues, right? Then you add crypto to it, and you have investment, and just
enemy of the state. Hey, lock them away and throw away the key.
Yeah, exactly. Let's just send the guy to jail right now. Let's not even worry about what the charges are. Because there must be something fishy in there.
Right.
But that's why we're really trying to play it by the book. We bring in the best legal talent. We have really top people that we're working with top reputations. We want to be pure as the driven snow on this all the way through, so that no one ever looks at this thing and sees anything fishy whatsoever. And again, the way we approach the diamond grading and the diamond audit and the guarantee of the audit and the encouraging of people to take delivery of their diamond anytime they want to. They don't have to leave it with us. All these things are trying to be in the direction of transparency and to make the regulators not be upset with us, to put it honestly. But to your question, is the regulatory landscape for crypto going to get better or worse? almost can't get worse, right? I shouldn't say that. But
That's actually true. It can't get worse.
knock on wood. It's pretty awful. All I can think of is I've been very thrilled to see blockchain. Let's use the B word, not the C word.
There we go. There we go. You got to say the right words when you mess with them.
Yeah, you use the blockchain world, and suddenly you have a word that is not freaking people out. You have the biggest banks looking at blockchain. You have, like, in our industry, my industry, De Beers, the biggest mining company, is using blockchain heavily for various purposes of tracking the provenance of diamonds. So blockchain is legit. People mention Bitcoin, and the regulators get all weirded out. But
yeah, that's because they don't want the Bitcoin part. They want that CBDC to roll out, so they gotta say blockchain.
Exactly, they like the blockchain.
Yeah.
But I think think of blockchain as kind of the bow of the icebreaker. It sort of is on the SS legitimacy, let's call it. It's moving the whole industry more towards legitimacy and more towards acceptability. And as that blockchain concept gets out there and people realize that Bitcoin was basically the inventor of the blockchain, it sort of gives the whole industry that much more legitimacy. Maybe I'm.
No, I'm with you. We always say on the show, we call those base hits. It's like, hey, maybe we don't like it, but at least it's a base hit. It's going to get people closer to mass adoption, right? So whatever, we'll take it. Again, Jacques Voorhees, thanks for being on the show. People, again, this is Icecap. Again, I have this pulled up. You can see here the Icecap token anatomy. They actually break down all the diamonds there. This is diamonds plus Ethereum equals Icecap, a revolutionary way to use diamonds for asset diversification. Jacques, I'm going to say we're definitely going to have you back on the show because I know people are going to be commenting on this video with tons of questions and stuff. So we, maybe in a few months, once you guys really get rolling again, get the site up or get the Bitcoin, the Ethereum, love to hear your thoughts on some of those processes and how that's going. And then, of course, where you all start to mature and progress to. We definitely want to hear more when we get a chance.
Sounds great. Happy to come back. And just our own website URL is icecap.diamonds.
Icecap.diamonds.
Yeah.
There we go, people.
Domain, so.
And if you want to buy some of these, or if you at least want to check out the marketplace, people, that's OpenSea, OPENSEA.io. And all you have to do is type in Icecap in the search bar to your right. It's a little magnifying glass like all websites. And all the diamonds are coming up. And hey, if you're thinking about buying that $771,120 diamond, make sure you send me that email first so I can refer you. I know a guy who knows a guy who does this thing. All right, let me get that $3,800, and I'll make sure I don't know. I'll get everybody some streamers, some champagne or something one day on the show.
Let's do it.
Hey, Jacques, as always, thanks for being on the show. Don't go anywhere. I'm going to end the recording, and then we'll make sure we chat real quick. And as always, people, thanks for watching. Make sure you smash that like and share so we can get some more guests on the show that's in the crypto and blockchain industry to tell you about some of the cool projects they have going on as well. As always, cheers, and we'll see you all tomorrow.